Morning all, Simon Brown here doing this week's Know Your Platform. I'm delving into some warrants this week. A couple of folks have been asking about them in particular. There's certainly been some pickup in interest. I'll do a brief overview of what a warrant is, how to find them, how to trade them, external websites and the like. I'm also going to do more details on my podcast for tomorrow. I'll put links to that. And if there's interest and demand, we can go a lot deeper into this rabbit hole. Let's first kick off. Warrants are a derivative. That is an option. That is the right to buy or sell a particular share. Two types of warrants: call warrants, put warrants. Calls rise as the underlying rises, and puts rise as the underlying falls. In other words, put warrants, you make money in falling markets, and call warrants, you make money in rising markets. I'm going to come to the rest of this in a moment. Go back to the derivative part, is that so therefore naturally they are derivatives and therefore they are at the pointy end of the trading space. These are not long-term investment products, these are short-term trading products, and as such most people never heard of or never touch a warrant, and that's perfectly not a bad scenario to be in. The one benefit to warrants over traditional trading instruments such as CFDs or futures is that you can only lose what you invest. I know that sounds crazy, but if you take a future or CFD position, you can lose more money than you start with. You put 10 grand in, you can lose 20, 30, 60, 70, whatever the case may be. In a warrant, you put 10 in, you can only lose 10. I started my trading life in warrants in 97 when they were first listed in South Africa by Deutsche Bank. I think Deutsche Bank was first, and traded them for into the early 2000s. Certainly CFDs has taken over, but there are benefits. And one of those benefits is that you can only lose what you start with. One of the downsides with warrants, aside from derivative, dangerous, but another issue with warrants is also quite simply that they got a lot of Greeks, a lot of complexity, a lot of black skull formulas, which I'm going to briefly touch on today. As I said, if folks are interested, we can go a lot deeper if you want. First, we need to understand the warrant code. It will be a 6 alphanumeric, although it's typically just letters. First 3 letters tell you the underlying. So TOP is top 40. NPN, NASPAS, PRS would be process. PRX rather would be process. The 4th letter tells you who the issuer is, Standard Bank, dominant player in the space. 5th letter tells you type of warrant. B stands for standard, sort of vanilla warrant. K for knockout. I for share installment. I'm going to do them separately. And then the last letter denotes type. An A to O is a call warrant, and a P to Z is a put warrant. So it would be top SBA, and then Standard Bank issues another top SBZ, etc. So you can tell a bit already from just that. But then we have some Greeks: gearing, theta, delta, and expiry. So your expiry is that warrants, unlike futures which have an expiry but can roll, and CFDs which are perpetual, warrants have an expiry date. That is critically important. They have gearing. All derivatives have gearing. So if your gearing is 4% for every 1% move in the underlying share, you will get a 4% move in the warrant. It's not quite as linear as that, but that's the point. Theta, otherwise known as time decay, is hugely important. Warrants are essentially a decaying instrument. And take an example. The one I just used there a moment ago, top SPZ, currently trading around 30 cents. If the index goes sideways between now and expiry, that warrant goes to 0. It will expire with 0 value. That expiry happens to be December. And what happens is that theta is represented as a percentage per week. So let's forget until expiry. If there's no move in a week and theta is, say, 4%, that warrant will lose 4% over that 1 week period. And it can be absolutely massive. The way we manage theta is buy warrants with lots of time to expiry. Typically, I want to buy them with at least 3, ideally 6 months to expiry. They have delta. I'm not going to delve too much into that. It's a mathematical output from the formula, which in a broad sense tells you percentage chance of that warrant expiring with value. Not at profit, just with value. You buy a warrant at 30 cents. If it expires at 1 cent, it expired with value. You've lost money, but there was value. an expiry date. They do have a market maker. The relevant issuers will be buyers and sellers in the market at the specific levels depending on the price of the underlying, and Standard Bank publishes those details on their Warrants website, which is warrants.co.za. It's called a matrix. Also, warrants, trade them within a Standard Bank, excuse me, online share trading warrant account. You pay a flat 50 Rand of brokerage. And that's quite significant. I mean, I bought some earlier in the week, and I can't remember how much I think I bought 100,000 at 25 cents. So 25,000 trade, I pay $50 plus taxes. That said, you have to do it in a warrant account. You log to my account, you go to product registration, you click warrant registration, and you can open a warrants account. It was the first account I opened at Standard Bank, so it's my default. But if you haven't got a warrants account, request it today. It'll happen overnight. So I know a lot of jargon and stuff going through there. Some caution, these are derivatives. They expire, and I mentioned that twice because they expire, and they suddenly, if they expire with value, you will automatically be paid that value. But oftentimes they expire with no value, and therefore you lose all the money you put into them. These are not shares. They don't have that time to recover. If you bought Sasol at $600, will Sasol go back to 600? Maybe. It's going to take some time. You'll be a whole lot older, but you've got that time. With the warrant, you simply don't have time. They have Theta, that is that weekly time decay. That is hugely important. That can hurt you if you get an aggressive one. Watch out for the knockouts. I'm going to touch on the knockouts in more details as soon as we get to the website as to how to find them. And then the last point, I will be doing a more detailed podcast, which will be out tomorrow, which you can buy. Yep, I'll show you which one I bought in a moment. So let's go off to here. Make sure my questions don't disappear. Folks, you got questions, drop them into the Q&A box. So here is an example of a warrant. This is a put warrant on the top 40. You can see Standard Bank buyer and seller at 28 and 29 cents respectively. So they're keeping a nice spread. But let's be honest, 1 cent spread, as best as it can be, is still some 3%. In fact, let's call it 3.5%. So if you buy at 29 and you were to sell immediately, aside from costs, you're going to lose 3.5%. But you can see that there are market makers, and as it moves, it'll go along. You can also add them to watch lists. Right at the bottom, there is my same top SBZ, and you can see bid 28, ask 29, buyer and seller. So they exist within watch lists as per normal. You can watch the prices within Iris Viewpoint as per normal. None of that is any different to how we can see the normal shares, ETFs, etc. There are some differences. Obviously, I buy a warrant in a warrant account. You can see up at the top here that is donated by the W to indicate that that is my warrant account. And you can see the one lonesome little warrant that I purchased sitting in the market. I bought 100,000, 25 cents each. I've got them on sale at 1 Rand. You can see them sitting there, and they are my crash puts. Now, my idea behind crash puts, and please don't rush out and think this is a genius idea. There are a lot of flaws with my idea. My idea is quite simple. The market has run quite hard. I bought these last week after we'd had like 6 or 7 green days in a row. Hence, I got in at 25 cents. And my view was quite simple. If our market takes a turn for the worse at some point between now and later in the year, this warrant will appreciate in value. I think the market has wholly disconnected from reality. In truth, that's what markets do very often. Markets and reality are not always bed friends, and the market can do as it likes. I just think there's a disconnect. I think we're going to have a second wave down. I think we're going to have a tough couple of years economically and therefore in the markets. And if that happens and our market loses 20 or 25% between now and the end of the year, I will walk away with this warrant paying me some profit, and that profit will then offset any losses I've made. Now, when I talked around this on Twitter over the weekend, someone's like, yeah, but you know what? If your equity portfolio goes down, it can go up again. My earlier point, equities don't expire. Well, they might go bankrupt, but they don't expire. What the point I made is that, sure, in an ideal world, if I get all of this right, and a lot of if, buts, and maybes, markets fall, I exit this position and I cash out with, I don't know, 10, 50, 100,000 profit, and I take that and I will put that into the equity market. So I use that sort of catch some on the downside, put it into the market. Will I get all that timing right? Short answer, no. Will I get some of it right? Maybe. We hope so. The point with this particular warrant is it has an expiry date, early December, and more than that, it has a strike level of 41,000. Now, I haven't mentioned strike levels yet because it starts to get complicated, but in short, on expiry, if the top 40 is below 41,000, this warrant will have value. It's a put warrant, so I want it below 41,000 and it'll have some value, and then we will know what we're talking in that space there. If it's only at 41,010 points, then it has absolutely no value. Oops, let's undo that. If you want to find warrants, first thing, if you go to the share block up there, you can't find them by typing shares. You've got to click the drop down and say, show me the warrant on NASPAS SBC. This is a call warrant on NASPAS, and there I find the particular warrant on NASPAS SBC. If I just go to NASPAS, if I just go to NASPAS and I type shares, subsector, you will see now my warrants have disappeared from here. Share status, it should say to me, and used to say to me, it doesn't. So I can't even find it from there in particular. So what I then need to do is go to Instruments and click on Warrants. This will say, okay, what warrant are you interested in? I'm interested in a warrant issued over NASPAS. And there is my list of warrants issued over NASPAS. It tells me nothing. It just tells me the code and the fact that they are trading, which is of very modest use because I need to know those expiry dates, those strike prices. These are the ones over the top 40. I need more information. So what we then do, Instruments, Filters, Warrants filter. Now we say, please show me all warrants listed over NASPAS. And you can see it immediately brings up information. It tells me the strike price. Strike price is important. Typically, you want a strike price around 15 to maybe 20% away, but 15 or maybe. So the SPQ, which is the put, and the SPC would be the two attractive ones. However, SPC expires in 69 days. That's okay, but you'll notice the one above it, SBB, is expiring next week. It expires in 7 days' time. Don't trade a warrant with only 7 days to trade. That is horrendous. Tells you the type. You've got American and European. Ignore that. It is either the C for call or P for put. In other words, the puts will make money as NASPAS falls. The calls will make money as NASPAS rises. And then the share installment, we're going to do those individually on their own. Conversion ratio just tells you how many warrants equal a share. That's not applicable really unless you plan on exercise. Delta, remember I said delta is a percentage. So that one there, the top one, basically showing a delta of 100%. It expires in a week and its strike price is 2,250. And I can't even remember what NASPAS is, but NASPAS is massively in the money. It's at 2,961. Now, could NASPAS drop below 2,250 Rand by next week? Absolutely. Mathematically, it's saying don't stress it. Next one down's got a delta of 67, then 83, 43, 29. That 29 for me is a little too, it's a little too rich for me perhaps, but nonetheless, I mean, you run with it. Effective gearing, this is the amplification of the move. In other words, for every 1% move in the underlying, your warrant will move 3.8%, 5.9, 2.9, 11.1. And I'll show you in a second why that 11.1 gearing is intuitively attractive, but not very lacquer. You've got implied volatility. Let's park that. Remember I mentioned weekly time decay? So this warrant here will lose almost a quarter of its value every single week. That is insane. Yes, you're getting a nice gearing, but that thing is heading to zero in double quick time. you need to have a 3% move to the upside. Sorry, it's a put warrant. NASPAS falls 3% and you break even because, and so you were right, but the time decay eats all of your profit. And this is what I mean when I say the complexity in warrants is extreme. What you typically want is you want a time decay that's around 2 or 3%. Let me go back to Toppy. So Toppy, I'm going to search for particular because I'm looking for warrant type is European put. So when I wanted a top 40 warrant, basically there are three options. Those two there, with strikes at 46 and 48,000, I like the strike price, but I've got min days, only 69 days. Therefore, I took the one that gives me 190 days, expiring 3rd of December, 41,000. My gearing, 6.5, I can manage with that. My weekly time decay, 3.3%, I can manage with that. So, yeah, there's a choice here, but I'm taking the more cautious one, the one that gives me more time. Some questions coming through. Fritz, I see your question. Web trader, we're going to be picking up some web traders. I'm going to be speaking to Edition. We have done a web trader, just very much the basics. If you go to YouTube, search standard online share trading, you'll find the web trader video. Simon, are they like mini hedge funds? No, but you'll find a lot of hedge funds use them in that they're options. And options in the what do I want to say? In the hedge fund market, sometimes they'll use futures or CFDs, but oftentimes they'll use options as well, and that's because your downside risk is limited to 100%, but it's limited, and because you can use them almost as insurance policies to a degree. And that's what I've done with this topic. So I took a trade on NASPAS a few weeks ago, and what I was doing there. And Keith McLachlan alerted me to it. It was ahead of the Tencent results, and Tencent results, we knew that they were going to be great because we'd seen Activision and others come out with good results, and we expected good Tencent results. We expected the market to therefore lift Tencent and therefore NASPAS and therefore process, and therefore I took a quick trade on some NASPASs, and it worked brilliantly. It worked way better than expected. Can you get out of a warrant? That's a great question. Yeah, so you can sell a warrant whenever you want. It's on the market. You will note for the warrant that I'm particularly holding right now, my top SPZ, I have put it on the market to sell. I bought 100,000 and I'm trying to sell 100,000. I'm selling them at R1, and I might change that. But if the market collapses and I'm having an afternoon nap and suddenly we're at $1, it's a long way to go. But nonetheless, if it happens, I will trade out. Question, what is American versus European? So American means you can exercise at any point. European says you can only exercise at expiry. Exercise means that you convert the warrants for the underlying shares. That's not why we're trading them. So truthfully, that is of little interest. So that's the online share trading platform. Instruments, you can go and find the warrants, but way better is the warrant filter. And you can then go and but as much, again, you can say, show me certain strike prices or ratios or deltas, etc., etc. So you can, much like the normal sort of search filter, you've got a fair bit of flexibility there. The warrants themselves, this area here, yeah, we've got warrants, but it's not telling you a heck lot of details. It just tells you basically the code. You then go to the warrants website. Now, this is for standard bank warrants. You're not going to find them all here. You're also going to find some of their ETNs and et cetera, et cetera. So you can find warrants. You can also find knockouts. Let's quickly touch on knockout warrants. Knockout warrants are extra dangerous in that they have a strike level. And if the market trades once at that strike level, the warrant expires immediately. So you've got a very real risk that it expires immediately. And if it expires immediately, you get zero money back, absolutely zero money back. You will notice these are predominantly calls and then two puts, and the puts were at 53,000 and 50,000. The 50,000 one I had a long, hard look at because it expires in April. but 50,000 points is way close. And if our market goes to 50,000, which it might well do, that warrant goes to zero. The other one at 53 with the September, no. To me, there's a time and place for knockouts. The time and place is not what I'm trying to do right now. These are high risk things. You can identify the knockout and that the second to last letter is a K. So top tells you it's top 40, S tells you Standard Bank, and K tells you it's a knockout, tells you it's extra dangerous. There is a brochure here, so you can go and find more information about it. And there was an interview that I did with Brett Duncan way back in the day, again, talking about knockout warrants. These things are dangerous. Here are just your vanilla warrants. There's quite a chunky list. The problem with warrants is that, for example, let's look at the blue label here. And I'm just using blue label as an example. There are only two. They're both American calls. But so if you want to go and short blue label, there isn't one available to go short. Most of the warrants are coming through as calls. And your options are for strike, both in August at 290 and 340. Yeah, they're not too bad. Gearings are, that is effective gearing levels 3.3 and 2.8. Those actually aren't too shabby, but your choice is often quite limited. Richmond, there are two, they're both calls. Discovery, there are three, all call warrants. There's not that many puts on the equity. There are some. There's two puts on Goldfields. How do I know they're puts? If the last letter is A to O, they calls. If it's P to Z, they puts. So how many? Call and put. So you've got some optionality there. Implats, two calls, two puts. It's got you some space there. August is manageable, but maybe a little close. The thing with warrants is you bring in a second vector of risk. First vector of risk is calling the direction of the share right. Is it going up or down? If you get that right, but you get the wrong warrant, you could still lose money. You could, for example, the top 40 could fall, but I might not make money in my warrant because it might fall in November and it might only fall to 42,000, which is 16% down, but I need it to be below 41. So because you've got those two vectors, that brings in that extra risk. And and then of course, as I said, there's all the Greeks, the thetas, the deltas, and all of that sort of stuff, which then come along and add further complexity to it. The website here has got a bunch of information, particularly in terms of understanding. What it's also got is what we call the extended warrant matrix. I just want to open it, but it's going to insist on saving it, isn't it? It is. What the warrants matrix just tells you is where they will be. There it is. Opened itself up in Excel, which is a little bit old-fashioned. Calls, puts, installments. And I need to be doing some zooming here. So there's your ABSA call. And what they're basically saying is at certain share prices, what price are they bid or offered on the particular market? That one seems to be null and void. Let's find some that have got some interesting pricing. So here we go. Anglo Platinum SBG. Anglo at 991, they'll be buying at 45, selling at 47. So if your buyers are at 991 and your sellers are at 998, they will be buying at 45, selling at 48. So you can get a sense of where they will be in that particular market. You can get a sense of where they're moving and when they're going to be moving. So this is useful in terms of understanding how it's running, etc. This matrix is from 27, that is today, so it is current. Hugh, what happens if top 40 below 41,000 before December and then it rises at expiry? Do you make money in this case? So I'm going to give you two examples. Let's say the market collapses to 35,000 and I do nothing and then it rises and in December the market is 42,000. My warrant will be worthless. However, when that warrant falls to 35,000, that is going to be massively in the money. Let me see. These are my puts. Top SBZ. So short answer Let's be aggressive. In fact, they're not even showing me. Okay, so if the market falls to 44,500, they'll be buying at 38 cents. So here, let's say the market only falls to 44.5, I can now sell that warrant at 38. If it fell to 35,000, by my calculations, it's probably worth north of $1. And at that point, I take my money. I'm already on the offer at R1. So if our market collapses, I would exit beforehand. And that's the other thing with warrants is don't forget to take your profit. Because you might be well in the profit and then time and movement goes against you, and suddenly that warrant that was hugely valuable is not so much valuable anymore. Let's go back to the NPN SBC. And you can see this warrant traded just on the 13th, so 2 weeks ago. That's when the results came out. That warrant traded at 54 cents. It's now at 32. It has lost, what's that, 22 cents. It's lost almost 40% of its value. And over that time, in that short little period, 2 weeks, I can tell you, NASPAS has not lost. So there was the spike in NASPAS, same date. Sure, NASPAS has come back, but it's come back fractions of a percent compared to that warrant. So I said earlier there were two risk vectors. There are many risk vectors. The last one is don't forget to take profit. That is hugely important. Yeah, so a question coming through, can you buy warrants from other issuers? You absolutely can. We've got some Investec. I think they're Investec here. Yep, I think they're Investecs. And down at the bottom. So there are other warrant issuers. They all trade on the JSE. So you can buy and sell anybody's warrant if you want to. Standard Bank is certainly the dominant player. I mean, we're looking here at NASPAS. Looking at the top 40, my bad. Aside from the top three, the rest are all issued by Standard Bank. So they're definitely the main player in that space. Avail yourself of education, get smart. There's a whole bunch here. Don't just jump in. These things are risky, but certainly I've been trading them a little bit more for the first time in a long time. We've had a couple of people asking questions. As I said, I'm going to do the podcast, which I'll record this afternoon, but it'll be online tomorrow when you wake up. It drops around, it'll be up about 5 o'clock tomorrow morning. There's the link. You'll go find the latest of the JSE Directs, and I'll go into a little more detail there. It'll be more around the products, less around the online share trading platform and the products. If you've got questions, mail me, simon@justonelap.com. Head to the Warrants website. There's contact details there. You can engage with the Standard Bank Warrants team at the same time. And if you're not sure, rather do nothing. Ladies and gents, no more questions coming through. We will park it there. I thank everyone for their time today. I wanted to go that way. That's the right way to be going through. We'll be back Friday. We'll be talking ETFs, and then, of course, our normal Monday. Hamish, you're asking how to open additional accounts on OST. If you're looking for the various different sort of products, my account, product registration, there's your warrants, your futures, your CFD, your option, and your tax-free. If you're talking about just a warrant, a different equity account, contact them. At this point, you'd have to email. Call center is closed for calls. Email simon@justonelap.com. If you forget my email, go to my vanity website, simonbrown.co.za. You'll find me all there. Hamish, an absolute pleasure. You're welcome to mail me questions. Also, if you've got ideas, I mean, we're doing warrants because I noticed that myself and a couple of my friends were starting to trade more warrants. And then oddly enough, I had a thread on the weekend, which I did around my top SPZ, and some folks asked me, and then I got a couple of emails as well. So, I mean, very much we're going to drive content here. If you want to see something, drop me a mail, drop me a tweet, because we're happy to engage. We absolutely are. Ladies and gents, we'll leave that there. Everyone stay safe. We'll chat again Friday to talk ETFs. Cheers all.